Oil has had another driver for growth, but the market sentiment is uncertain. The uptrend in oil may stop today. Meanwhile, the Russian currency has good upside potential despite the threat of sanctions. Today's surge in oil prices is due to rising tensions in the Middle East. Yesterday, Saudi Arabia reported several missile and drone attacks on its oil facilities and in particular on the world's biggest offshore oil loading facility in the Persian Gulf. According to the media, these attacks were more serious than those that happened in September 2019. Back then, oil production in the country was disrupted for several days and oil quotes soared shortly by 20%. Meanwhile, oil production did not suffer from yesterday's attacks as Saudis managed to intercept and destroy the drones launched by Yemen's Houthis. The energy market reacted strongly to these events. At one point, Brent jumped above $71 a barrel, while WTI reached its highest level since October 2018, trading at $67.70 a barrel. However, the rally has quickly lost its steam. After a few hours, oil bulls have lost momentum and the quotes moved lower. Both oil benchmarks began to return to the previous trading ranges set on Friday. The uptrend in oil is also supported by the events from last week. Investors' optimism is fueled by the fact that the OPEC Plus decided to keep its policy unchanged, and Saudi Arabia confirmed its intention to maintain its voluntary cuts of 1 million barrels per day. At the same time, the fundamental and technical backgrounds signal the overbought conditions in the market. Oil prices remain high despite an increase in crude inventories and weak fuel demand. A strong upside movement observed for several months usually indicates that the market is about to reach its peak. On the daily chart on Monday, Brent has formed a reversal candlestick pattern that may later turn into a bearish engulfing. Today, there is no trading on the ruble due to the public holiday in Russia. On Friday, the ruble closed the session in positive territory near the level of 74. It's possible that the Russian currency will open the trade on Tuesday with a sharp rise against the US dollar, as buyers may price in the recent surge in the oil quotes. But this scenario is highly unlikely. First of all, bears began to assert their strength in the energy market. Secondly, it's not easy for the ruble to have only one factor to determine its further direction, as it's choosing between oil and sanctions risks. It seems that the threat of sanctions will come to the forefront very soon. Investors need to evaluate the possibility of imposing tougher sanctions against Russia and its debt market. Such restrictions have been discussed in the US since 2018, but they have never been put into action. In the next session, the dollar-ruble pair may approach the level of 73 if the Russian currency strengthens amid oil's rally. Then the ruble bulls may push the quote even lower to 72.70. So far, March is the best month for the ruble. In addition to the seasonal factor, the ruble is supported by the results of the recent OPEC Plus meeting. Russia was granted the right to ramp up its oil output by 130,000 barrels per day starting from April. This will increase exports and the inflow of foreign currency into the country, which will have a positive effect on the ruble. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.